Hello, everybody. We're delighted to be at the FD Day once again since the previous editions. My name is Masha Laos. I'm head of sourcing in the strategic investments team at Arkea. And today we are with Adam Valkin, managing director of General Catalyst, which is a US-based VC, and Victoria van Lennep, who's the co-founder of Lendable. And we're here to discuss sustainable growth in Fintech, or race to biggest valuation. Victoria, could you please introduce yourself?
Yes, hi, so I'm Victoria, and I'm from Lendable, which is a consumer lending platform in the UK. So we originate and service unsecured consumer loans all around the UK online, and have been doing so for about 5.5 years now. We've done around 700 million in lending, and that's growing, and we have about 55 employees.
My name is Adam Valkin. I'm a managing director at General Catalyst, which is a venture capital firm. We manage about $5 billion US. Our current fund is 1.4 billion. We invest in the US and Europe primarily. We've invested in a lot of fintech companies over the years, including companies like Stripe, Monzo, Digit, Shift Technology, which is an insurance software company here in France, and many others. And thrilled to be here, and thank you for listening to us.
Victoria, could you please tell us what is sustainable growth for you, and how do you think you're achieving it with Lendable?
So I think if you're talking about sustainable growth, and especially in the context of Lendable, there are a couple of things. So first of all, we are meaningfully profitable, which I think is not something that a lot of fintechs are currently in Europe. We have made probably 6 or 7 times the equity that we've raised back, so in profit. And that allows us to have a real degree of flexibility and freedom in the terms of the types of products that we can test, but also it makes us a lot more resilient than our competitors to any types of external shocks. For example, in the context of lending, macroeconomic shocks, we don't have any pressure to originate in order to keep afloat. We don't have to make those monthly fees to cover our costs. We could drastically reduce our volumes and focus on the safest segment of borrowers and still cover our costs. So that's the first thing. And then secondly, I think if you're talking about sustainable growth, you have to ask yourself, is our core activity truly innovative? What are we really doing that is disruptive to our sector? I think that nowadays you have a lot of companies that we call fintechs that are really, truly very large finance businesses with a website. And they're not doing anything too dissimilar from what the large incumbents are doing. So from the beginning, we have decided to focus all of our efforts into being a technology-led company rather than a finance company. We thought we're going to pick one specific vertical of the banking activity, and we're going to apply technology to that, and we're going to automate it. So we thought we're going to do consumer lending, and we're going to build algorithms to do that fully automatically, and that's going to allow us to do it sustainably and grow sustainably.
Wow, this is so impressive, being profitable so quickly. Adam, what is your opinion on that? Because being on the VC side, is this something that you see quite often, or are you also quite impressed like me?
Yeah, I don't know anything about this topic of profitability. So it is very impressive. And the truth is, in the world of venture-backed fintech companies, there are actually very few profitable companies. And I think what's really interesting about Lendable and the company that Victoria and her partners have built is that it's extremely profitable and has been really efficient on the use of capital, and have done that while providing a phenomenal service to their customers, which you can tell from the reviews and positive feedback and referrals that they get in the market in the UK. And that, that says a lot, because consumer lending can be tricky, especially when you're dealing with unsecured, making sure that you do it in a way that's responsible and is appreciated by the customers. But I do think that while profitability is important, there are different ways to build a company, and for some companies, hyper growth can be really important because the cost of customer acquisition may be relatively very low in the present day, with a very high certainty of that changing over time. And I think we've seen that with a lot of the contemporary fintech companies, not just companies like Monzo that I've been involved with, where a lot of the customer growth has come organically through word of mouth. But there are lots of others like Revolut and Robinhood in the US, where just the quality of the customer proposition is so compelling, and the hooks are so strong that the opportunity to grow really fast is very tempting, just because you can. And if you think about how that compares to other parts of the consumer internet, where there are no free frontiers of customer acquisition, you're always paying a toll to Google and Facebook, and you're always fighting the equation of like, how much does it cost to acquire a customer and what's the lifetime value? In fintech, there have actually been real opportunities to acquire customers cost effectively, just because the service offerings have been so disruptive and so much better than what existed in the past. And part of that is credit to the companies that have built great products, but part of it is just how terrible the incumbent services have been, both in terms of the quality of the service offering, but also the pricing. And I think the thing that has kind of created this revolution, if you will, is a generation of entrepreneurs that just said, this doesn't make sense. Why is it that I am paying those fees? And why is it that that the customer service experience is so poor, and that it's and there's no transparency? So the fact that this generation has said, like, enough with that, like, we're tired of living with these kind of services, especially post the financial crisis, and has gone out and built the products that they themselves would want to use, which is what the Lendable team did, what the Monzo team did. They said, if I was, when we met the Monzo team before they even started, they said, if I was going to build a bank for my friends, like, what would that look like? And I think that's a recipe that's worked really well.
We're definitely living a very a revolutionary period, including, as you mentioned, as a customer. But I have to say also from a startup point of view, and I wanted to speak about also the valuation, and your opinion as a VC is very important. Do you think, Adam, that being profitable for a startup can negatively impact the company's valuation?
Yeah, so I mean, just on the topic of valuation, it probably is worth saying that valuations in fintech right now are very high. So, I mean, valuations in general are very high, but I would say within the tech sector, fintech especially so, and there are a few good reasons for that, including the fact that some of the most valuable companies and best quality businesses like the Stripes, IDN, Square, Shopify are like sort of fintech oriented. Either fintech companies or fintech oriented, but also because payments and essentially the opportunity around that comes from fintech, which is enabling global payments, creating a global, making products accessible from anywhere, enabling small merchants to operate as if they were big companies with all the same benefits that big companies would have. It's so compelling that essentially what's happening is you enabling people to pay and get paid and borrow and lend in ways that were never possible before, and that's a huge deal for the global economy. So the space is really hot. It's possible that it's overheated, but it's probably too soon to tell. Is being profitable a negative? I don't think it is a negative. But there are situations where it potentially could be a negative, where, but that also may relate to the types of investors. So,
it's mostly about if you're profitable but no longer growing, then it's a negative.
Yeah, it's a negative.
But if both are going in the same direction, which is hopefully the case for us, then it can only be positively impacting the valuation, I'd say.
I mean, in general, I think that's exactly correct. In general, crazy prices are usually paid for crazy growth. So if there's no growth and high profitability, you're more likely to get valued on a multiple of the profits. You know, if there's really high growth, then but if you have very high growth and profitability, that's where you'll have the highest multiples.
If I can add something, like Arkea from our side, like as a strategic investor, the opinion on this high valuation, it's very interesting. Of course, we're living a certain very interesting times of hyper growth, of market blooming, and many interesting innovations in the market. But as a corporate partner and investor, we're a bit cautious with that, because obviously, like what we want to do is to build like a real industrial value on the long term, to establish like long-term lasting relationship with the partners, and obviously valuation must be really assessed to the real value proposition, and to very like down to earth metrics and what's happening with the company. Just really not looking to surf on some trend. I have another question. You already mentioned like the interesting model of Lendable and what you observe from this market, but what are the key technologies do you think are really disrupting fintech?
I think that one of the key technologies really disrupting this specific industry is the rise of APIs. So the fact that back in the day you had a handful of banks that offered all of the services, made all of the margins, and didn't want to communicate with any other businesses. They wanted to own the customer and its data. Now, with the rise of APIs, the landscape is very different. You have a network of interconnected communities who have divided this banking activity into hundreds of service providers. You know, you use Monzo for your current account, you use Lendable for your lending, you use Go Cardless for direct debit. Even if you use your Monzo account to make a international transfer, Monzo will use TransferWise. So this is an example that actually the startups are really happy to talk to each other. And I think that APIs also really foster innovation, because back in the day, you have to think about it, you had to use a service provider and then build bespoke connections with that specific provider, spend months and months to implement it. And then once you were tied in, there was absolutely no incentive for that service provider to innovate, because they thought there's no way they're going to switch, because that means, you know, another few months of integration. Whereas now, you know, at least in our company, we will plug into a data provider, and then if we're unhappy, there's always a threat that we might just switch overnight, because it's that easy with APIs. And so you always have this, you know, this incentive to innovate, which is great, I think, for the general market. Then the second thing I think that has drastically reduced barrier to entry in fintech, well, in general, for startups, and it's not really technology, but it's things like AWS. You know, back in the day, you would have had to spend 200K on servers before even starting out, and then pay more to put those in the Docklands. I mean, it was ridiculous. Now, AWS will offer you 1 whole year of free servers for you to try and build anything on it. And that's a game changer for entrepreneurs like us who have an idea.
Adam, do you would like to add anything on that?
I think it's pretty well said. You know, I would just, you know, on the topic of APIs, I think it's just really interesting that the fintech sector is essentially driving like the unbundling of banking services, as Victoria pointed out, where it used to be that your bank distributed but also manufactured all the products. So your savings, lending, every kind of account, credit, you just interacted with all your financial services through one provider. And I think this idea that kind of pioneered in China with the, you know, Alibaba and Tencent, but this idea that the software interface that you kind of interact through doesn't necessarily mean you're going to consume all the financial products from those providers. And that's a big shift that's going to have a huge impact on banking, but also on the fintech economy. And you know, I think that was reasonably well explained. So we have a really interesting API-focused business called Rapid that we co-invested with Stripe, which essentially connects merchants with local payments around the world. So not, like outside of the credit card rails, there are lots of other ways to pay. People pay through bank payments, through e-wallets, through cash payments. But in order to accept payments from all those different, in all those different ways, you used to need to do local integrations in every single country in the world, which is very difficult to do, especially if they may only represent a small flow for you. And Rapid has created a set of APIs that makes it easy for a merchant to accept payments through one integration anywhere in the world, through any channel. And they're getting a lot of traction, and we're very excited about it.
This is the thing, we basically keep building on another layer. So, for example, we were built on AWS, like Stripe built on AWS, we are building on Stripe, we're using them to take payments. It's the same for Monzo and TransferWise. Via API, you can keep building on these various layers, which makes it super attractive.
Of course, it's super attractive, and to have very fluid financial services, just being able to replace one element on another, just like a game of Lego. You add one brick on another. At Arca, definitely we share that vision. Sometimes the reality of adoption can be slightly. It may take a longer time. So because this conference is really like no bullshit. No, it takes time to adapt itself. And I'm not here to say like, of course it takes 1 week. It's a long-term project, all the API and the open banking vision, but we definitely share that vision at Arca, and already today there's already existing a network of partners with providing different fintech and financial services layers, and we're really hoping to build that together for more efficient financial services, obviously. Thank you very much. I think that time is a little bit. Would you like to maybe add one last?
Yeah. So since we have a minute and a half, no, I would just say that on the core topic of this panel, which is, what is the responsible way to grow a company in fintech? Like, do you focus on growth and maximizing valuation, or do you focus on having a profitable business? I think the real answer may be somewhere in between, like neither, which is you focus on having a healthy business. Which may or may not involve profitability in the short term, but it would probably involve a healthy underlying economic model, or the prospects of one, based on a roadmap of products that, because the truth is that most companies that are successful because they have an insertion point that really resonates, allows them to build substantial scale, a big customer base, but then may have a plan to add additional products which would continue to compound and improve the economic model. So I think like the thing that is really important is that either have a healthy underlying business model with sound unit economics, or a cohesive, coherent plan to get there. And that I think is like an important recipe to being successful, even if you're not profitable. Because profit can it's not always optimal to be profitable, although it's wonderful if you can be. And credit to Victoria and the Lendable team.
Thank you.
Anything else?
No, I don't have anything to add. I think you put it perfectly.
Well, thank you very much. Perfect on time. Thank you very much. Thank you.
Thank you.
Thank you.